Nobody likes the thought of facing an IRS audit. So how can you avoid an audit yourself? Keep watching for tips on how to avoid audits by the IRS. Making math mistakes. There are a lot of numbers that go on a tax form each year, and the spaces are small. If you're not a tax professional who works with these forms all the time, it can be easy enough to make a mistake. It's also pretty darn easy to fix before you actually submit the tax paperwork. Yet the IRS says one of the biggest mistakes people make on their tax forms each year involves math errors. When you file electronically, the computer actually helps with avoiding a math mistake, yet you still need to enter the numbers correctly. Social Security numbers. Your Social Security number is how the IRS identifies you. Like a math error, it's not uncommon for people to transpose numbers when they're recording them. You might also be entering the Social Security number of a spouse or children that aren't as familiar to you as your own. This is an easy spot to make a simple mistake and an easy one to check too. If you enter the wrong Social Security number, the information on your tax form won't be connected to you. It will be hard for the IRS to act good or bad on your tax forms. Be honest. You've heard plenty of stories of people fibbing, stretching the truth on their taxes in an effort to make some money back in a return. The truth is that it doesn't make sense to lie on your tax forms. If you do get an audit and you've lied, it becomes even harder to support your case in front of the IRS. The IRS is pretty darn good at spotting it when someone has exaggerated the numbers. If you do lie and the IRS catches even the smallest of lies, be prepared for them to start looking for other things you've potentially lied about too. Take realistic deductions. Unrealistic or huge deductions can be a red flag for the IRS. If you claim certain business deductions, you want those deductions to be in line with the type of work you do. You also want the amount to seem realistic to what you make while working. Pay attention to the amounts you've used for deductions in the past. If suddenly your deductions are enormously larger in amount than ever before, it's a red flag for the IRS. It really comes down to claiming deductions that are legitimate and that you can back up with receipts, and you shouldn't find yourself in an audit. Not filing. Not getting a tax return from you makes the IRS want to take a closer look at your taxes. Again, this is especially true for higher income wage earners. Remember, the IRS is in the business of collecting tax dollars. If you're a high income earner, the IRS wants to make sure you've paid what you're supposed to pay. This makes you more open to scrutiny, especially when you don't file your tax returns like expected. You can reduce the odds of an audit by preparing your tax forms carefully and checking them over for potential errors. If you need help with your taxes or facing an audit, we can help. Contact us today so we can start helping you deal with the IRS.